Good morning. The hearing will come to order. Today we examine barriers that prevent our nation's seniors and people with disabilities from being banked, from establishing credit, and building wealth. Seniors and people with disabilities need a bank account to safely deposit their paychecks and Social Security benefits. Yet millions of Americans, including 1.1 million older adults, and 1.7 million people with disabilities are unbanked. In my home state of Pennsylvania, there are 235,000 Pennsylvanians without a bank account. Similarly, millions of Americans are credit invisible, meaning they don't have credit history, or they have what we call a, quote, thin file. Many of these families live paycheck to paycheck or benefits check to benefits check. Because they're excluded from our mainstream financial system, they pay high fees for financial services such as cashing a check. They often rely upon expensive alternative services to pay their bills, and they are exposed to abuse of lenders and even fraud. To address these challenges, I've introduced legislation that will provide all Americans, including those who are underserved, with opportunities to build wealth. This includes the Young American Savers Act, Senate Bill 2206, that would provide children under the age of 18 with a savings account, putting them on a path to a stronger economic future. It also includes the Achieving a Better Life Experience Act, known as the ABLE Act, which was signed into law back in 2014. ABLE accounts make it possible for a person who acquires their disability prior to the age of 26 to save without risking loss of their federal disability benefits. Along with Senator Moran, I'm working to extend access to these vital ABLE accounts through the bipartisan ABLE Age Adjustment Act, that's Senate Bill 331. This important bill would allow those who acquire their disability prior to the age of 46 to save for their futures. And while we all need to help Americans find opportunities to save, we also must ensure they have the information they need, the information to make good financial decisions. So that's why today, along with Ranking Member Scott, I'm releasing this booklet. Here's the title of it if you can't see it from a distance: Building Financial Literacy, Information and Resources for People with Disabilities. So this booklet is something I'm proud to introduce with the ranking member today. It's intended to help people with disabilities to become banked, to build credit, to manage debt, and to deal with other common financial issues. And still, there are other perils in our financial system. This includes unscrupulous con artists who seek to steal seniors' hard-earned savings. Congress took an important step forward in that fight last week with the passage of the Stop Senior Scams Act. I want to thank Ranking Member Scott and Senators Kelly and Moran for their partnership on this legislation. It became part of the spending bill, the omnibus bill that passed last week. This effort, by virtue of this bill, will provide businesses with new tools to prevent seniors from being scammed. But there's more work to do. As we'll hear today, millions of Americans, millions of seniors and people with disabilities remain stranded on the sidelines of our nation's financial system. We have a responsibility to right this wrong. So I look forward to hearing more from our witnesses, and now I'll turn to our ranking member, Senator Scott.
Thank you, Mr. Chairman. Thank you for proving to the University of South Carolina health policy students that many things in America and certainly in the Senate continue to happen on a bipartisan fashion. There's no doubt that when you're not in Washington, D.C., and too often you hear through the screens in your homes or in your dormitories how polarizing or divisive Republicans and Democrats are in the United States Senate and the Congress, this committee particularly consistently acts in bipartisan way so as to serve Americans, not red states or blue states, not Republicans or Democrats, but we literally spend a lot of time working together to provide solutions to the concerns that everyday Americans are are suffering through. So I appreciate your leadership in a bipartisan fashion, and certainly thank you for holding the hearing that we're having today. Nearly 40 million Americans, 40 million Americans are credit invisible, meaning they have no or little credit history. Credit invisible Americans have a hard time getting approved for loans or finding a place to stay. A lack of credit can even impact your ability to get a job. Yes, 39 states, including South Carolina and Pennsylvania, allow employers to deny applicants a job based on their credit history. For the majority of families, having a bank account, we would think of that as just a given. 5.4% of our fellow Americans are without a bank account. In South Carolina, 41% of households making under $30,000 have limited or no ties to the banking system. 18.3% of people with disabilities and 5% of individuals who are 55 years of age or older are unbanked. Almost 17% of African Americans are unbanked. 31+% of unbanked earn less than $15,000 a year. Think about that. Less than $15,000 a year. 20.8% of unbanked folks do not have a high school diploma. Unfortunately, it is truly expensive to live in poverty or to be poor in America. Homeless individuals have a particularly difficult time opening a bank account. I've heard stories from social workers who are trying to help South Carolinians who are homeless find a bank account, trying to get the relationship that is so important, unable to do so because they lack an address. In other cases, a homeless individual may lack proper identification to comply with the rules of opening up an account. Credit invisible Americans are less likely to be in a position to save for their future, to save a rainy day fund, or to save for their retirement. People who are credit invisible do not usually have bank accounts. They rely on cashier's checks, payday lenders, or pawn shops for their financial needs. Let me say that in a different way. When you're using alternatives to our banking system, the fees associated with those alternatives can add up to about $40,000 over a lifetime. Think about $40 worth of fees, not interest, just fees to get the loans that you need. Those fees for someone making under $15,000 a year over a lifetime, which is 15 times 40 years of working, $600,000, that's nearly 7% of your income, lifetime income, going to fees. That's why innovation and creativity in the space of the credit invisible is so incredibly important. And one of the reasons why we highlight the work that we see in Columbia, South Carolina from Optus Bank. They have tried to help with this very important issue. They believe that all people should have access to the American dream, not just those born into the right circumstances or on the right side of the tracks. This bank offers a checking account with no minimum account balance, no fees, even as little as $100 in an account. Another way that we have to continue to work towards making sure that the credit invisible becomes visible is by introducing legislation that I have with Joe Manchin, the Bipartisan Credit Access and Inclusion Act, in order to help more Americans obtain and keep credit history. It allows landlords, telecom companies, and utility providers to report on-time payments to the three major credit bureaus. This common sense piece of legislation will help millions of Americans who do not have traditional credit histories, but have demonstrated they have credit-worthy behavior, which will help them lower their interest rates while keeping more of their hard-earned dollars. A second bill I introduced with Senator Cortez Masto, the expanding access to lending options, gives credit unions more flexibility in the types of loans that they can offer to find a way to help those who desperately need assistance. Chairman, once again, thank you for holding today's hearing, and to the University of South Carolina, Go Cox.
We do welcome the students here from the University of South Carolina. I'm a little concerned that at least 3 individuals don't have a seat, but maybe we can remedy that.
Maybe they'll allow them to sit there and testify before the hearing today. I know those 3 students are ready. I can look at their faces and tell that they're ready to walk out the door too. So anyways, thank you all for coming.
If they're ready to testify, I hope the rules provide that. But
Yes, sir.
well, thanks very much. And I also want to acknowledge Senator Rick Scott, who's joined us online. We're going to be having members join us in person or virtually today. So we're grateful for their presence on a busy day when senators are moving between hearings and meetings and then later in the day some votes. But let's start with our witness introductions. Our first witness is Laurie Trowinski. Laurie is the Director of Finance and Employment at the AARP Public Policy Institute. She has her PhD in Economics and Finance from Catholic University and is a certified financial planner. She's an expert in mortgage lending, consumer debt, and financial reform. So, Dr. Truwinsky, thank you for being here with us. And now I'll turn to Ranking Member Scott to introduce our next witness.
Thank you, Mr. Chairman. I'd like to introduce Sen Gilchrist. Stephen's focus on financial inclusion is critical. He understands the importance of this issue, and he thrives because he loves and has passion for making sure that people have access to opportunity. Mr. Gilchrist comes from Columbia, South Carolina. He serves as the chairman and the CEO of the South Carolina African American Chamber of Commerce. The Chamber focuses on the significant needs of both large and small minority-owned businesses. His experience leading the South Carolina African American Chamber and as a local small business owner himself gives him a unique insight on the needs of the unbanked and the credit invisible. He is a member of MasterCard's Master Your Card Corporate Advisory Board, which works to address concerns of the unbanked. Mr. Gilchrist works for his community in many ways. Minister of Music at St. Matthew's United Methodist Church. Now I know why he never asks me to sing in public. And Good Hope Wesley United Methodist Church in Camden, South Carolina. Formerly served as chairman of the Planning and Zoning Commission in Richland County. In 2020, Mr. Gilchrist was appointed to serve on the United States Commission on Civil Rights. Under his leadership, the South Carolina African American Chamber has worked with its members to reduce barriers for minority and majority businesses alike to engage with the financial system. In his testimony, we will hear Mr. Gilchrist talk about the challenges of minority businesses who are unbanked and the role financial technology companies have played in helping unbanked businesses thrive. We look forward to his testimony.
Thank you, Ranking Member Scott. Our third witness is Kai Sitchcombe. Kai is the co-founder and CEO of TruLink Financial. Kai was inspired to develop the company and its services after Ruth, his grandmother, was scammed. The services are designed to encourage continued independence while also putting in place financial protections. So we want to thank Mr. Sitchcombe for sharing your expertise with us today. And then our fourth witness is Shelly Jasper. Shelly is a disability advocate from the state of Iowa. She experienced an accident that severed her spinal cord when she was just 28 years old and has used a wheelchair ever since that time. As a person with a disability, Shelly understands the need for access to financial services and the challenges to saving. So thank you, Shelly, for being with us today and sharing your story with the committee. So we'll start with our first witness, Dr. Truwinsky. You may share your statement.
Thank you. Chairman Casey, Ranking Member Scott, and members of the committee, thank you for the opportunity to testify on behalf of AARP, our 38 million members, and all older adults nationwide. I am Laurie Trowinski, Director of Finance and Employment at the AARP Public Policy Institute. Today's hearing is about people and the issues they face when they are unbanked and when they are credit invisible and have no access to affordable credit. It's about the importance of building financial inclusion for America's underserved populations. Think about these words: unbanked and invisible. Unbanked. Many of us might not know what it feels like to be unbanked. Did you ever forget your wallet and phone and then realize you have no money or credit cards or debit cards with you? You're standing at the cash register, a cart full of groceries, and there's a huge line behind you. And what do? You're left there with not many choices. You have to figure out a way to pay for your food. You might look at the guy next to you, the loan shark there. He might be willing to lend you some money, but he'll charge you 150% interest. And then he might follow you home or to your office until you pay him back. That is what it feels like to be unbanked. For someone without access to a savings or checking account, it feels like that every day, all the time. Invisible. Have you ever been in a meeting and no one even notices you're there? Everyone else got to ask a question, but when you raised your hand, no one saw you. You felt invisible. To be credit invisible means that the credit rating agencies don't see you. And that means when you go to borrow money or try to get a credit card, you will be denied. It's like you don't exist. That's the story of financial inclusion in America. Some people have access to the mainstream banking system, while others do not. In 2019, the FDIC found that 7.1 million American households were unbanked, and approximately 3.1 million of those were headed by someone age 50 and older. People with disabilities are more likely to be unbanked than people who do not have a disability. And there are also significant differences in unbanked rates based on race and ethnicity, with white and Asian households less likely to be unbanked than other groups. Differences were also observed by residence location, with urban households and rural households having higher unbanked rates than those in suburbia. Some of these differences can partly be attributed to decreases in access to brick and mortar banks. The National Community Reinvestment Coalition found that more than 4,000 bank branches closed between March 2020 and December 2021. Branch locations are important not just for individual consumers, but also for small businesses within the community. Another factor that affects access to bank accounts is broadband internet access. And for many rural communities, high-speed internet access is still not available. And for other households, broadband internet access is simply not affordable. One reason some households are unbanked is cost. Many consumers said they do not have enough money to meet minimum balance requirements and that high fees are unaffordable. Access to credit is another part of financial inclusion. CFPB research found that 26 million people were credit invisible, and an additional 19 million were found to be credit unscorable, leaving both groups without access to low-cost products. When people have no credit score or a low credit score, it can affect them not only when trying to obtain credit, but also when seeking employment, rental housing, buying auto or homeowners insurance, obtaining cell phone service, and accessing utilities without a deposit. Financial inclusion also requires protections for all consumers, particularly people with diminished capacity and other vulnerable consumers who are targets of financial exploitation. More information and data can be found in my written statement. Thank you for the opportunity to testify and share AARP's views on these important issues. We look forward to working with you to ensure that all consumers, especially older consumers and people with disabilities, are included in our financial system and have access to high-quality financial products that are safe, readily accessible, and affordable. I'll be happy to answer any questions.
Dr. Truwinsky, thank you very much for your testimony, and we'll turn next to Mr. Gilchrist. You may begin your statement.
Thank you, Mr. Chairman, and good morning, Senators. Chairman Casey, I want to thank you and my great senator from South Carolina, Senator Tim Scott, for allowing me to make a few comments here today. As you know, the pandemic has been hard on a lot of Americans, particularly those that were vulnerable before the virus. For example, our elderly and those with pre-existing conditions, and our small and minority-owned businesses, just to name a few, have seen incredible setbacks due to this disease. In fact, prior to the pandemic's onslaught, Mr. Chairman, I had the privilege of representing over 15,000 African American chamber members in my beloved state of South Carolina. As I sit here today, I can report that we have lost nearly 40% of those businesses. As this committee attempts to address ways in which to help the unbanked and underbanked in our country, it is important to remember that many of these individuals are business owners. At the onset of the pandemic, our chamber had to think creatively about how we could help our members in a very fast-changing environment. Stay-at-home measures were put in place, and person-to-person business transactions became even more remote. Many of our members were not part of the traditional banking experience, and conversely, consumers began to rapidly use digital services for their goods and services. And these rapidly changing environments are hard for anyone, but particularly our most fragile and vulnerable entities. Our chamber was very fortunate to have a relationship with MasterCard. We know it as a credit card company, but the company's vice president during a visit to South Carolina described MasterCard as a technology company. We were very interested in this concept, Mr. Chairman, particularly as technology was and is revolutionizing the way we do and transact business. We believe then, as we do now, that it is essential to aid these small businesses with tools and resources necessary to navigate through these remarkably challenging times. We have learned how electronic payment technology can be a valuable tool for addressing needs of the unbanked and underbanked. And according to research done by the FDIC and MasterCard, evidence shows that large populations throughout the rural South need better access to financial tools for financial stability and upward mobility. And while we need to expand the concept of creditworthiness, we also need to continue to bring those outside the mainstream banking system into the financial mainstream. So there are two key tactics, Mr. Chairman, that will be critical to this work, we believe. First, we believe it's important to work with fintech companies to connect unbanked and underbanked individuals with emerging technologies that can supply low-cost financial services for working people. Secondly, we believe that developing tailored financial products and services for individuals on the economic margins, to include seniors, people with disabilities, and all other vulnerable adults, is critically important. We must also seek to utilize products and services that require low minimum balances and carry low or no fees. For small and rural businesses in America, accepting more electronic payments can help expand revenue, with online purchasing improving cash flow and streamlining accounting. The Chamber's goal is simple. It's to develop strategies to help ensure that not only business owners, but low to moderate income residents can keep more of their hard-earned money. This was an essential element in increasing the standard of living for hundreds and thousands of residents, particularly in South and in rural communities all across our country. Mr. Chairman, I'm going to conclude my remarks by saying that the pandemic has been something our country has not experienced in most of our lifetimes. But we're all blessed to still be here. In South Carolina, we did lose a lot of businesses, but we did not lose the very thing that makes our country great, which are our entrepreneurs. And I want to thank you and this committee for your time and attention to this matter today. Thank you, Mr. Chairman, members of the committee.
Well, Mr. Gilchrist, thank you for your statement, and thanks for your witness, your presence today as a witness. We'll turn next to our third witness, Mr. Stinchcomb. You may begin.
Chairman Casey, Ranking Member Scott, members of the committee, thank you for inviting me to provide testimony on an issue that is very near to my heart. My story begins with my grandmother, Ruth Heimer. She was born in 1921 in Rensselaer, Indiana. She worked as a missionary and taught music at the church school. She died of Alzheimer's 2 years ago at age 98. Over this journey, her ability to make financial decisions decayed. Inherently with Alzheimer's, if you are unable to form new memories, you are unable to budget. If you cannot remember what you did this morning, you have no recollection of having spent money, and so your budget always seems full. For my grandmother, this took the form of runaway charitable giving. Historically, she had donated $10 a few times a month to help feed hungry children or support injured veterans. Now that she had Alzheimer's, when she received solicitations for money by mail or by phone, she would always donate, often multiple times per day. With her runaway spending, the bank said she would have to close her bank account. The experience of memory loss is already heartbreaking. With the loss of financial independence layered on top, it is devastating. Taking away her bank account would mean she could no longer go to the movies, shop for her own groceries and cook her own food, go out for ice cream or pizza. What she needed was a new way to bank, invest, and pay for things that would enable another person, my mom in this case, to support her decision making. With my mom in the loop, she would be able to continue to buy groceries, go to the movies, go out with her friends, but not make repeated charitable contributions. This insight was the spark for my company, Truwinsky. 10 years later, we have helped 200,000 families through moments like these. We expanded our work to those with special needs, recovering from addiction, managing mental health challenges, and people with other types of disabilities. We also support around 8,000 care professionals who help these demographic groups in managing their finances. We have enabled about $1 billion of safe purchases, and our investment arm manages about $1 billion of assets. Every single person deserves access to high-quality banking services, regardless of their age, disability, income, or wealth. In the course of providing our service, we learned the story of the dad who can continue to have coffee with his Army buddies once a week, as he has done for 40 years. About a young woman whose parents never expected her to be able to make a purchase on her own. About a mom whose son had spent all his money on drugs and was sleeping in his car, but she could still help him buy gas, so at least he wouldn't be cold that winter. We learned that just like there's no person who can make 100% of decisions entirely on their own, there is no person who should have 0% input into the decisions that govern their life. And we learned that independence is not needing no help, it is having access to the help you need. Reflecting on these 10 years since the company was founded, we have come to better understand the size and scope of the problem and the opportunity available in addressing it. The total population of family caregivers is 44 million, about 1 in 3 households. These customers come from every walk of society, rich and poor. 1 in 3 small business owners, for example, is helping an aging parent manage their finances. It is a problem that the private sector should be eager to solve. Why then is this population still so underserved? Much of it is awareness of the category, the opportunity, and the solution. But we also need government to give permission to the private sector. From a financial services perspective, legal competence is binary. Either someone is legally competent or they are not. If competent, they are responsible for everything that happens in their account. In contrast, if you are judged not to be competent, you may not be allowed to write a check or sign a credit card receipt. And in either case, the financial services industry has washed their hands. We need both permission and encouragement from the regulators to see those areas in between 0% and 100%. Similarly, we need to think about who steps in when a person needs support, how to address the role of the caregiver. One very helpful thing was the safe harbor for enabling a bank to bring in a trusted caregiver in cases of suspected elder abuse, through the interagency guidance, the CFPB advisory, and ultimately the Senior Safe Act. We need to expand these safe harbors. When a bank is working with a trusted caregiver, they know they will be punished if they trust the wrong person, but they will never be rewarded for trusting the right person. A public policy of understanding the role of family and professional caregivers and supporting banks who get caregivers involved is very needed. And with those observations, I will wrap up. Thank you for your time and your attention to this very important issue that profoundly affects the lives of millions.
Thank you, Mr. Stinchcomb, for your testimony and your presence with us today. We'll turn next to our fourth and final witness, Ms. Jaspering.
Good morning, Chairman Casey, Ranking Member Scott, and members of the Senate Special Committee on Aging. Thank you for the opportunity to speak today. My name is Shelly Jasper. I live in Ames, Iowa. I'm 44 years old and work part-time as a pricing assistant at Wheatsfield Cooperative. In 2003, I was hired full-time at Wheatsfield, which luckily gave me benefits including an IRA and short-term disability insurance. In 2005, I had an accidental fall, which resulted in my quadriplegia. I was not able to return to work until the spring of 2006 to work part-time in the office because I was no longer able to do the physical labor necessary for my previous job. 7 years ago, I moved into my adapted home built by Habitat for Humanity. My mortgage is more affordable than rent in the college town I live in. My parents assisted me with money to purchase a 2007 accessible van recently, which is my fourth used van. We buy older vans to keep me out of debt, but they typically require more repairs and upkeep. I cannot currently save money for emergency situations due to asset limitations, which I have to follow in order to keep my Medicaid waiver, which pays for my home care. I use a hometown bank for my checking account, and they also manage my mortgage. They allow me to pay on the 10th of the month to ensure my SSDI check has been deposited, even though this is technically considered late according to the bank mortgage policy. Being in a smaller community, I believe the bank is more understanding about the physical restrictions I have, and they worked with me to ensure I do not receive late fees. Because the asset limit rules are complicated, I do not always fully understand them. To be safe, I do not have a savings account or credit cards. I turn to my parents for financial assistance when a big bill occurs, but they are in their 70s and will not always be available for this help with paperwork or funds. There is so much I don't feel confident in understanding about my physical situation. I worry about the details I might miss, which might cause me to lose my Medicaid waiver, which is the only way I can contribute to life. My SSDI would not be enough to fully pay for my bills and mortgage, so I'm very privileged to be able to work part-time. With the rising cost of basic needs, finances cause stress. For instance, when there's a 3-month paycheck, it causes me to have to manage and cut my hours so I don't earn too much money and risk of having benefits cut. This is an inconvenience to my employer to accommodate me, which causes tasks at work to go unfinished. Along with the general cost of living expenses, I have disability needs I pay for as well. I recently found a need for a power wheelchair, and since Medicare would not cover the cost of a power chair at this time, I found a reasonably priced used chair that would fit my size. I paid out of pocket and could not afford a maintenance contract. The armrest on the chair broke almost immediately, and because I used them as a way to transfer in and out of the chair. Those armrests will cost me $500 to get a set that will accommodate my needs and not break easily. These additional costs add up fast, and Medicare can only help every 5 years for a new chair. My message here is that disability is expensive, and there are barriers to earning enough money to cover those expenses. Most important to me is that I need to manage finances in such a way that I do not lose my home care support. Without home care, I could not do a basic morning routine that everyone has to do to get up to go to work. Then I would lose my job, my home, and be more dependent on state and federal assistance programs, or even worse, be put in a care facility. I have always lived with anxiety, and after adding disability into my life 16 years ago, being dependent on others causes more stress. The greatest fear I have is losing my home care, which would take away my life. I am from a frugal family and was taught to save for emergencies. Unlike my friend who was born with her disability, mine was something that nobody could prepare for. In preparing for her disabled life as an adult, her parents set up an IRA, which would eventually pay for her home care after losing her ability to work as she aged. This preparation kept her from using Medicaid and other assistance programs for many years. For someone like me who acquires a disability later in life, it can be difficult to find financial resources and information to manage this new life. One thing that would help me is an ABLE account. urge Congress to pass the Able Age Adjustment Act. I cannot open an Able account because I became disabled at the age of 28, 2 years after the age limit. If I could save for the future, for repairs to the van, for repairs to my house, for repairs to the wheelchair, I wouldn't have to live in fear. The $2,000 asset limit to keep my disability benefits means that I am stuck financially and will always live on the edge. In addition to the requirements of Medicaid, SSI, SSDI, vocational rehab, and state programs are overwhelming. We need understandable information on how to manage our benefits and these earnings. We need to locate trusted people that we can count on to walk us through the financial stages in life. Finally, I ask that the monthly earnings limit be increased so that people with disabilities can work as much as they want and need to. I have worked for my current employer for 18 years. In the next few months, I will have the opportunity to get a promotion. For anyone, that would be a good thing. But for me, that means anxiety and fear. If I'm paid too much, I could lose my benefits, and then I could not work. Thank you for your time and consideration on helping the disability and aging community to improve their financial situations. Financial improvements will have many benefits, including improving the mental and physical well-being of people with disabilities and our independence.
Ms. Jaspering, thanks for your testimony today. I want to thank all of our witnesses. I'll start with you for my first question, and then I'll turn to Ranking Member Scott. One thing we know about people with disabilities in terms of the challenges they face is they have significantly less savings than Americans who don't have a disability. The National Disability Institute reports that people with disabilities are twice as likely to be unbanked and 20% less likely to have a savings account than their peers who are non-disabled. One of the reasons for not having a savings account is because the risk of losing disability benefits if a person has more than $2,000 in assets, as you just made reference to in your statement. In 2014, we passed the ABLE Act, which made it possible for people with disabilities to open tax-advantaged accounts, savings accounts, and save up to not $2,000, but $100,000 without risking losing those benefits. But that option is only open to people who have acquired their disability before the age of 26. So we're trying to get that age 26 level up to 46. So my question for you is, if an ABLE account were available to you, can you tell us what you'd be able to do with that account? Number one, and number two, why it's important to make ABLE accounts available to people who have acquired their disability after the age of 26.
I think raising the age limit would be amazing. There's so many things that I've wanted to save for in the past 8 years. I could have saved a lot of money if I would have been disabled earlier. Having this power wheelchair that I need fixed, I need a different cushion. I need a shower chair that fits my size. These specialty equipment things are not always covered or covered in a timely manner for me to prevent sores and live the life that I want to live. I didn't plan for this disability, and I want to live as normal as possible. I always wanted to be a business owner, and so I could hire people to assist me in selling things at the farmer's market, with anything I might need to get up daily. There's so many opportunities if I was allowed to save money like I did before.
Well, that's why we're grateful you bring your personal story to these issues, and we learn so much more about the policy by hearing your own personal story as someone who's lived in kind of both worlds, the world of not having a disability and the world of living with one. So we should pass the Able Age Adjustment Act. I want to turn next to Mr. Stinchcomb, and in particular make note of the fact that you've indicated that people there are people who are underserved in our financial system are often targets of scams and are targeted for acts of fraud. Last week, I mentioned earlier, the Senate and the House passed the spending bill, which included the Stop Senior Scams Act. The President has signed the overall bill into law. So now that act, the Stop Senior Scams Act, is law. And again, I want to thank our ranking member for his help on that legislation. The law will bring together a committee, including representatives of federal agencies, number one, number two, the retail sector, number three, consumer advocacy organizations, and number four, financial services, representatives from financial services as well as others. That committee will identify educational materials for retailers, financial services, and wire transfer companies to prevent scams that affect seniors. So in essence, what we're trying to do is work to train folks in those businesses that deal with seniors all the time and are better trained to spot evidence of fraud or some indicator of fraud, so folks can intervene and maybe ask a couple more questions before someone makes a decision. So, Mr. Stinchcomb, as an expert working in this field, what advice would you have for this committee that would be formed pursuant to the legislation as they begin their work?
Yeah, thanks for the question. I think that the thing that I would highlight is that something that's a scam for one person may be an intended purchase for a different person. And so, even beyond memory loss, there are so many different challenges that can affect your purchasing decisions as you age. Loss of vision might mean that a mail solicitation that looks like it has handwriting on it seems like it's handwriting. That handwriting font seems like a personal appeal. Loss of hearing can make telemarketing calls confusing. Changes in cognition make a person naturally more trusting as they age. And I would say that in many cases, I think that it's helpful to train people, but I think in many other cases, these companies know exactly what they're doing. So if you look at the scripts for telemarketing calls, it will mislead somebody deliberately into believing that they have donated in the past to that organization, that the organization is different than what it purports to be. And folks are hiding behind the fine print on that. I think that extending the do not call list to charities and political organizations can be life-saving for somebody who's in a situation of memory loss. Right now, they're exempt from that. I think that there's also just enforcement actions around sweepstakes, around TV shopping and shipping and handling, where you buy 4 garden gnomes for the price of one, and you have a non-refundable $35 shipping and handling fee on each of them. And that's, a surprise to somebody who might not have the income to support that.
Thanks very much. And I know I'm over time, but I'll turn to Ranking Member Scott.
Thank you, Mr. Chairman. Your questions should not have a time limit. Honestly, the importance of this topic really is such that we need to invest as much time as possible in getting experts and people who have been impacted negatively by the challenges that we face in the unbanked and credit invisible lanes of life, bringing it to the surface so that more people around the country understand and appreciate the challenges that Americans are struggling through. So thank you for your questions. I found them to be illuminating and important. Questions for you, Mr. Gilchrist. An estimated 7.1 million U.S. households are unbanked. Likewise, approximately 40 million Americans are credit invisible. 3.5 million households are headed by someone age 50 or older without a checking or savings account. 16.2% of working age disabled households are unbanked. From your experience, can you explain why people, especially in underserved communities, might be unbanked or have lack access to credit? Mr. Gilchrist, if you could take yourself off mute, it'll be helpful.
Sorry about that,
That's
Senator.
okay.
Thank you so much for the question. One of the things that we've learned in our state, in South Carolina, is that there's been a historical distrust of the traditional financial institutions. Senator, I would say this in jest, we have people, believe it or not, that still trust more to put their money in a mattress or bury it in the backyard than to trust a bank with it, and the hesitancy and the reluctancy of trusting the traditional system has been a historical thing, and we've learned that from our members. The lack of access to a traditional bank is also been a huge issue in a state like South Carolina, where 65% of the state is rural. In many of those areas of our state, people have very limited access to a traditional financial institution. And so, as a consequence of that, it has prevented and created an opportunity for people not to be able to do the traditional banking as some would often consider. And for those of us who are just, as I heard in the comments earlier, very, we know that there are banking institutions in our communities, and we're comfortable with that. But in many communities where you have the rural nature like we have in South Carolina, that just doesn't seem to exist. In some places, it could potentially be 30 to 60 miles away. And so we found that has been a huge barrier to the number of people, or the high rate of people in rural America that has not been able to create the type of relationship with a banking institution.
Well, Mr. Gilchrist, you touch on a very important topic that I have a question for you on as relates to fintech companies and the role that they can play in helping to bridge the gap in some of the communities that desperately need it. As you know, the American dream is oftentimes seen as synonymous with home ownership. And unfortunately, many families struggle to get approved for a mortgage. But the more we see the research, the more we understand that the research has shown that in many underserved zip codes, financial technology firms, we call fintech, are more likely to approve a mortgage application than traditional banks. Could you talk about the critical role, as you just alluded to, of fintech companies that they provide in underserved communities as it relates to accessing credit and perhaps even achieving the American dream of home ownership?
No, absolutely, Senator. Thank you for that question as well. The reality of it is technology has become the new banking tool. Fintech companies have been extraordinarily instrumental in being able to evaluate the people's credit worthiness in different ways. In some ways, to streamline the financial the financial process, so that folk can at least find some way, some credible way of being qualified to purchase a home, to start a business, or what have you. And we've seen that there's so much interest in that. Back to my earlier point about the whole issue of the unbanked, we see so many of our businesses within South Carolina, small businesses in particular, who have used things like payment technology as a way to ensure that they can build some type of track record, so that when they're wanting to go and apply for a bank loan or a car loan or a small business loan, then the fintech companies have been much more engaged in helping those folk to actually achieve those opportunities. And so we've seen a lot of progress in that. Obviously, we have a long way to go in fully seeing the progress in that space. But what we do recognize is that it is one that is emerging, and it is an opportunity for many of these folk to find that opportunity for the American dream, particularly on owning a home.
I certainly have more questions for you, and I know that I'm out of time, and this is time for the chairman to ask some questions, but I'll come back with you.
Thank you, Senator.
Well, let me, Stephen, while I have you here, and Chairman's
Yes,
been
sir.
gracious with my time, and I appreciate it. Likely will not pay him back ever in the future for this graciousness, but I'll certainly consider it seriously. You talk about, oftentimes we hear stories about the food deserts. So places where you live, whether in rural America or the inner city areas, where the cost of doing business seems to have ushered in this concept of food deserts where there are no grocery stores nearby. And it seems like in rural America, a third of the counties around the country are a banking desert where there is no local brick and mortar location. And I know that you're the head of the Chamber of the South Carolina African American Chamber of Commerce, but the fact of the matter is that good news in South Carolina, we are one big South Carolina family, and because of that, we care about all South Carolinians, no matter what your title is and no matter what you do. And so I can't imagine that the folks in Abbeville or McClellanville or Anderson County, all rural parts of South Carolina, they too are suffering through the challenges. And it doesn't matter whether you're black or white. The fact of the matter is, if you don't have a financial institution, a brick and mortar someplace near your house, you may have suffered through this same challenge of being in a place where you are in a banking desert. So the impact that we're seeing reverberates in rural America, but certainly in rural South Carolina where there are too many banking locations. Can you talk about the importance of us just continuing to work in the direction of fintech companies and making sure that people have access to credit, especially when they're credit worthy, and having a relationship with a financial institution is a really important part of that engagement?
No, Senator, you're absolutely correct, and you know, one of the things that we often talk about in the chamber, banking institutions at one point were a part of the community. You know, we often talk about community banking and those types of things, but it's very difficult for that to be a reality when they don't exist in certain communities. We learned this when the pandemic, in the beginning of the pandemic, and there was so many small businesses that you know, closed due to the fact that they couldn't operate, and so many of them applied for the resources that the federal government had available, all but to find out that because many of them did not have relationships with banking institutions, that it made it more difficult for these folk to actually access the revenue like they wanted to. And so the reality of it is, you're right. I mean, it creates a vacuum and a banking desert all across our country. And so the opportunities again for fintech companies to come in and help fulfill that void, and at the same time, educate communities on financial literacy and the things that they need to do in order to be prepared, in order to access loans, access credit, all of those things is so critically important. I appreciate the work that you've done on your work on your bill to look at evaluating credit in very different ways, because that is certainly, you and Senator Manchin, that is certainly one of the things that is certainly needed among communities where there needs to be a redefining of what we believe credit is, and more specifically, how that relates to our banking industries and the role that fintech companies can play in helping with that work.
Thank you, sir.
I want to thank Ranking Member Scott. We're joined by Senator Braun, and as I mentioned earlier, we have senators that are moving between hearings and other engagements today, so we're happy to see Senator Braun, who's earlier than we thought he'd be, so that never happens around here. We're grateful.
Thank you, Mr. Chairman. And maybe that's because I come so recently from the private sector to where being on time, you had to basically do it. So didn't do that with your customers or your suppliers. It generally wasn't a good relationship long term. Interesting conversation here today, because my business that I started and ran for nearly 37 years, 3 of my 4 kids do it now. My only business partner was a community bank. We were so small for so long. That was the only place that you could, ask for credit, especially in growing your business, not on the personal side, but I think a lot of this, is intertwined not only on personal credit, but credit for small business entrepreneurs. I see it in that connection I still have with that world as being an industry that still has a decent amount of options. However, when you're talking about credit deserts, you're talking about the new economy, which is going to be more digital all the time. I think what I'm mostly interested in, and the question would be for Mr. Gilchrist, is there enough critical mass out there currently that can grow into the markets that are underserved? does it need to be coaxed in a way from the federal government, which generally is always a double-edged sword because sometimes it's stifling, not enabling. What is your opinion in terms of taking a snapshot of the banking industry currently? Are they getting the cues? Do they have the incentives to service these markets that in many cases are underserved?
Senator, thank you so much for that question. As I think about that, it just reminds me about the efforts of Dodd-Frank and more specifically, what many of us believe, meaning small businesses across the country believe, that it took away the ability for community banks to do exactly what you were describing earlier, and that is to have a relationship. And the concern then becomes whether or not compliance has replaced community, and how overbearing has that been. And so we have a study committee of our chamber that looked at this issue several years ago, and more specifically as it relates to minority businesses and those that were seeking to try to access capital to grow their businesses, all but to find out that those regulatory constraints that were, under the auspices of some of the efforts of Dodd-Frank, were really challenging for many of our small businesses. And so it gave the banks then another tool to not lend in many ways, and to be more reserved in their ability to do so. So we certainly believe that there is an opportunity, Senator, for us to be able to have a conversation about how do we really encourage community banking again, and use companies like fintechs and others that recognize the work in that space to be able to help encourage that. Certainly, policy is important to do that. And just as we, had policy to encourage the banks to be mindful of how we be too aggressive with Dodd-Frank, I think we can also begin to look at policies that can also limit, unleash some of those restrictions so that people can have the type of relationship with the banking institutions as you described earlier.
Well, I think that's a good response, and I think it makes sense. And I do want to make the point that there's a difference between anyone entering the credit system. When they need that first loan, whether it's business or personal, that is one issue. And my observation is there's still plenty of infrastructure out there, even though the industry's gotten more concentrated. And we got to make sure, I think, before we try to unleash anything new from the federal government with sometimes the unintended consequences, we need to look carefully to see if we need to maybe loosen up on some stuff that was not well aimed, kind of had unintended consequences. And I know for a fact, you mentioned regulations, there are a lot of fees that have come along with Dodd-Frank that community banks have to contend with that they never had before. So I guess my point would be we need to first look at what we can do within the system, enable the fintech arena, which is new, fledgling, and try not to pile on any more regulations that would actually be unintended in terms of the consequence and actually thwart the process. Thank you.
Thank you.
Thank you, Senator Braun. I'll turn next to another round of questions for me as we await some more senators in the next 15 minutes or so. I want to start with Dr. Truwinsky. We've all heard the phrase digital divide. We've heard that over and over again, especially in the context of high-speed internet, or I should say the lack of access to high-speed internet. It obviously has a huge effect in communities that are more rural or small-town communities. It obviously also affects older Americans and people with disabilities in a very disproportionate fashion. There's also a continuing failure, really, to deal with this until the recent infrastructure legislation, which I think will provide us some resources that we've never really had before to hit this problem pretty hard. In Pennsylvania, we've got 67 counties, but more than 70% of them are rural counties. So we have a lot of places where there's lack of high-speed internet. But one thing we found out during the pandemic was what was thought to be a predominantly, at least by way of region, predominantly a rural problem was in fact a problem within cities, even cities that were considered well-connected. You had a lot of kids trying to do their homework in cities and couldn't do it for various reasons. Part of it was connectivity in their neighborhood. Part of it was not having the resources to have the technology they needed. So you had kids, sitting in a parking lot at a McDonald's trying to get connected to do their homework. So this is a rural problem. It's an urban problem. It's a small town problem, but it's obviously a problem for individual Americans who might have a disability or are seniors. The infrastructure legislation helped, but I'd start with Dr. Truwinsky on this. How can internet access improve financial inclusion among older adults and people with disabilities?
Thank you, Chairman, for the question. This is a really important question because it affects millions of people. And as someone who recently visited Bedford County, Pennsylvania, I am aware that there are some issues with internet access there. My mother comes from Bedford County, and I visit there often. So thank you. There are three key things that we need to address to improve outcomes for people in terms of gaining access to the internet. And you talked about one, right? It is the idea that many rural communities and many urban communities do not have this access. So that's number one. Number two is the affordability issue. And you also mentioned that. The Affordable Connectivity Program is key, and I think we are in agreement. It's likely to help many more people than any existing programs that we have. There's a third area that we haven't really touched upon yet this morning, and that's the idea that digital literacy and training people how to use the technology is really, really important. And for older adults, many of whom may not have a lot of experience using various technologies, they may face an even higher barrier to using technology, especially for transactions. So AARP has a number of programs designed to help with that. We have the OATS program, which is a program designed to connect older people with training programs to teach them the latest digital technology. We also have another program through the AARP Foundation and Chase that's designed to help with the same issue, but has specific training modules about financial access and technology. And another important part of that program involves providing information to fintech innovators on some of the things that they should think about when designing fintech solutions for older people. And finally, we need to do a better job of educating people about frauds and scams. Through the AARP BankSafe program, we are currently training frontline workers in financial institutions to recognize signs of fraud before the money leaves the account. And that is key. It's preventing the fraud from happening in the first place. So that's, all of these things are important. And I think, there will be more people using financial technology in the future, and we all have a role to play in keeping people safe while they do that.
Doctor, thanks very much. And I think the point you made about that training and digital literacy is going to be important as we move forward. It's one thing to build a better system of providing high-speed internet. It's another thing to make sure that folks have the training that they need. So that's something we'll have to bear in mind. Ranking Member Scott, I turn to you.
Thank you, Mr. Chairman, and certainly very, very helpful testimonies this morning. Thank you all for being a part of the solution, as you are the ones oftentimes facing the challenges and the problems. Ms. Jaspering, thank you for your compelling testimony, your recommendations on legislative solutions to some of the things that you have faced in the real world of your experience, and that has been quite helpful for me. I'd love to ask you a question after I give a short statement. Certainly, due to rising compliance costs and mergers, the number of community banks fell by somewhere around 30% from 2012 to 2019. Today, more than a third, as I said with Mr. Gilchrist, more than a third of rural America do not have local banks. Brick and mortar, you can't walk into your bank, you can't have access to your local bank. Personal relationships with local community banks is vital, and for so many reasons, the access that you get from your local bank is critically important. Frankly, as I was listening to your testimony, you reinforced that very important point that it is your relationship with your local bank that helps you avoid unnecessary fees, whether it's late fees or banking fees, and that really important relationship that you have with your local bank can't be overestimated. But I would certainly love for you to talk to me for a few minutes about the importance of that relationship and how, as you talked about levels of anxiety, that relationship brings that anxiety down and allows you to plan for as much as you possibly can.
Yes, thank you. Being a local, I have joined boards and other committees and met a lot of people. And because of my accident in a small town, people tend to know who you are. So it's been helpful because I know the person who manages my mortgage, and when I get a letter in the mail that says, "Oh, your mortgage is late," and I call him, and he's like, "It's not a big deal. That's an automatic letter we send out to everyone because mortgages are due at the beginning of the month. But due to the fact that Social Security disability pays on the 3rd, I had originally set it up to pay on the 10th, and he said that's not a problem at all. Don't even worry about it. We won't charge you the late fees." Before my accident, I had a small credit card through them with a $500 limit, and that had helped me with some emergency things, but I don't have that currently because I just want to make sure I stay out of debt, and so my parents have been able to help me out. So just having that community aspect has helped me to have a little less stress, for sure.
Yes, ma'am. Well, thank you for that answer, Ms. Jaspering. One final question before my time perhaps runs out this time. I may come back around to you. You talked about the importance of overcoming some of the struggles because of your accident. You noted the struggle of finding a parking spot in your hometown because other drivers don't realize they need to leave space for the operation of your wheelchair lift. This makes running your errands, like going to your local bank that is quite cooperative, that much more difficult. The good news in part may be the evolution of financial technology and the ability to use things like mobile banking and peer-to-peer payment services, whether that's Venmo or whatever the latest, greatest way of being able to use technology to make your payments or to do things that might make your life a little easier and more flexible. Can you just talk about the importance of how some of the things that many may take for granted may actually make your life a little more easy?
Definitely. I definitely use online banking, and Venmo helps me when a friend helps me out, and I can just Venmo her.
Awesome.
When she pumps my gas for me, and I just Venmo her the money to cover that. And but as far as people in Generation X, we're still learning the technology, so it is interesting and risky to some to use that, but for me, technology is very important, definitely, because to have that easy access. Because dealing with parking, yeah, you hit the nose right there. I do
Yes,
not
ma'am.
like that at all.
Well, thank you for sharing your story and your life with us for the last hour or so. We really appreciate your insight. Chairman?
Thank you, Ranking Member Scott. Ms. Jaspering, I think we'll stay with you for this question, if you don't mind. I guess it's not every day that we get a witness from Iowa, so we're staying with her. You mentioned your parents have been a great source of financial advice and support for you. And we know that, unfortunately, studies show that people with disabilities tend to score lower on measures of financial literacy and have lower confidence in their financial literacy skills than the rest of the population. And the basic reason for that is that many people with disabilities lack trusted resources, I should say, of help on financial matters. I mentioned earlier the booklet that the Ranking Member Scott and I produced entitled Building Financial Literacy, Information and Resources for People with Disabilities. And if you go through the book, it highlights a couple of areas of focus. At the beginning, the first area is on building credit, and there's a kind of a recitation of the problem, but then tips and considerations to take advantage of, whether it's getting started and how you build credit or improving credit scores. The second topic we talk about is managing debt, and again, it has tips in there for how to manage debt. The third is building savings through the ABLE accounts that I mentioned earlier by virtue of that legislation. The next area is navigating benefits, enrolling, using, and maintaining eligibility for public benefits, whether it's Medicaid or SSI or SNAP. The next area is finding affordable and accessible housing, which is obviously a huge issue for so many Americans, including those with disabilities. At the very end of the booklet, there's a picture of Senator Scott and I when we were much younger, if you need to look at that.
Nothing wrong with glamour shot, Mr. Chairman.
The glamour
Nothing wrong with
shots.
Yes.
But we obviously prepared this book, and our staffs worked hard on it, to provide more information for greater financial literacy for people with disabilities. So that's a long predicate to my question, but Ms. Jaspering, from your perspective, how important is it for people with disabilities to have resources, whether it's a resource like this, a printed material, but also access to someone to help them with their personal finances and maybe outlining some options for them?
That is very important. I'm glad that you have been working so hard on that, because it's been a big stress to my family to figure out how to manage when I need government assistance. Nobody in my family's ever needed that. So we, understanding how to manage your taxes, and like I said, I wanted to own a business, and being able to it's overwhelming to understand all the details in every program, and I don't want to lose any necessary benefits like home care to be able to live. So having a hub for that information is great, and trusted people that have learned what works for everybody and how to manage that is very important, because when you have an accident, you ask the social workers, they don't always know where to lead you to the most appropriate information. And there might be people that have been working and had 401ks. There might be people that are just very low income, and they need to know how they can have a affordable apartment to live in so that they stay out of facilities.
Well, that's a set of challenges for anyone. But thanks for sharing that from your personal perspective. Ranking Member Scott, I'll turn back to you as we await several of our colleagues.
Well, let me just say, Mr. Chairman, that one of the things I'd suggest that is sometimes overlooked are the little things that we do to provide as much information as possible about resources that are available through the government. I'm not sure that we as a Congress or as a Senate do enough work to educate and inform the public on the multiple streams that are available through the government and building financial literacy. The pamphlet that you and I put together is an important part of trying to help people understand the resources that are available. And as a guy who grew up in poverty and in a single-parent household, home ownership is something that was so elusive for my family it felt like forever. My grandparents did not buy their first home until my grandfather was in his 60s, almost about 61 or 62. And so the page 15 in our little pamphlet talks about finding affordable and accessible housing. And I think about the comments that we've heard this morning, and it just reinforces not just simply having a house, but having good accessibility when you have housing. And that means for those with disabilities that the framework may be different. And that's such an important part. And listening to the testimony, in a former life, I served on the board at Habitat for Humanity, and to hear the work that they're doing in Iowa is really important for all of us to remember the importance of it. But this booklet can provide helpful hints and tips about that information. And Mr. Chairman, I would say that another resource that we oftentimes don't hear a lot about is the resource of our offices. I know that my office is around South Carolina, and I'm sure the same is true about your offices around Pennsylvania, is a place where people who need help understanding the quagmire pit that seems to be the federal government at times can actually be a place for help. And I would encourage those folks who are paying attention to and need help from those of us who serve in public office to perhaps to take a look at our offices. I know that my office has handled thousands upon thousands of disability cases, and I know that yours has done the same as well. So I do think that we should make sure that the public understand and appreciate that important component that we can play beyond passing legislation. We have an absolute apparatus for the sole purpose of helping South Carolinians find help if the federal government should be a part of that solution or needs to be a part of that solution. And we take great pride in the number of cases that we spend a lot of time working upon. With that said, I will turn back to Mr. Gilchrist of South Carolina to talk through a really important issue of the Credit Access and Inclusion Act. And Mr. Gilchrist, research shows that reporting alternative payment data like utility or cell phone bills, rent payments when you're renting to credit agencies will help more Americans be able to access affordable credit. It will lead to over a 20% increase in prime credit for those earning less than $20,000 per year, and a 15% increase to prime credit for those earning between $20,000 and $30,000 a year. It's one of the reasons why I introduced the Credit Access and Inclusion Act with Senator Manchin, that would make it easier for credit agencies to use this alternative data. The good news, Mr. Gilchrist, is as I've had conversations with the three major reporting agencies, 2 of the 3 of those agencies have embraced the legislation before its passage and started making the type of changes that will help transform the experience, i.e. lower interest rates, and that means more money of yours you get to keep. Could you explain how this bill, from your perspective, working with so many businesses, might help not only those businesses, but as business owners age, become seniors, help those seniors achieve the dreams and goals that they aspire?
Well, thank you, Senator, for the question, and thank you also for the legislation. We think it is monumental legislation, particularly in South Carolina, that can help people all across our country. And you know, one of the things that we discussed here in South Carolina regarding that legislation was how important it was to have balance, to be able to have balance and an evaluation of folk credit worthiness in a very different way. You know, people pay their utility bills, they pay their rent, they pay their car notes, young people pay their cell phone bills. And so when they have some of these barriers that the traditional institutions of banking and lending put in place because of certain credit, whether that's because they're new to the credit market or they may not have had credit in a while and have not used it in a while. This type of legislation certainly helps to be able to bridge that gap and be able to expand the opportunity for those who may not have had an opportunity to access credit, the ability to be able to do so. So we're very excited about that. I'm encouraged to hear the credit rating agencies that have already expressed support for this piece of legislation, and that's important. And we certainly stand ready to support this legislation and to enact it when the time comes, Senator. So again, thank you for your leadership on that.
Thank you, sir, very much for your answer. Mr. Chairman?
Turn next to Senator Blumenthal.
Thank you, Mr. Chairman, and thanks for having this hearing. The unbanked or underbanked part of our population is really deprived of what has become an essential service, and access is critical no matter what someone's age is. I've worked hard on this issue along with a number of my colleagues to pass legislation and encourage action among the private industry and government agencies. I recently introduced the Elder Abuse Protection Act of 2021 that builds on my 2017 Elder Abuse Prevention and Prosecution Act by establishing the Elder Justice Initiative as a permanent office within the Department of Justice, because what we have found is that 40% of Connecticut households were struggling to make ends meet, having a bank account, maintaining good credit, and making timely debt payments is out of reach for them. And I think the Department of Justice can effectively enforce laws, or more effectively enforce them, so as to address this problem. But the COVID-19 pandemic has exacerbated and exposed inequalities in our society that highlight the importance of this issue. And I want to address this question to Ms. Truwinsky. During your testimony, you mentioned personal savings is a pillar of financial security for older adults. I have co-sponsored the American Opportunities Account Act introduced by Senator Booker. It would provide children with a savings account at birth with annual contributions. We have similar legislation in Connecticut, championed by our Treasurer, Sean Wooden, that has established a Connecticut Baby Bonds program, creating trusts for children born into poverty whose births are covered by the state's Medicaid program. Let me ask you, how will this kind of baby bonds program lay a foundation for financial security among older Americans and people with disabilities?
Thank you, Senator. I appreciate the question. There is no doubt that financial security will grow throughout a lifetime, and it's super important for it to start as early as possible. I'm in a unique situation, I think. I was a student in a public school in northern New Jersey in the early 1970s. And at that time, we had banking day every Tuesday. And the local bank came in and we signed up for savings accounts. And every Tuesday, the banking lady would come in, collect envelopes. We would have a little money in there. She would take them to the bank. 2 days later, she'd come back. We would get to see our deposit and we would get to watch it grow over time. So the idea of getting people used to savings at an early age, of using a banking system at an early age, is critical, because we know that if you can save a little money and you face a financial emergency, you can use that money to deal with it, and it helps keep you out of borrowing high-cost credit. So inclusion in the system is vital. Having access to a small pool of savings can make a world of difference over time. And we've actually studied this at AARP, and we've found that people who are able to maintain an emergency savings accounts will have better long-term financial security outcomes.
I am struck by the early experience that you had, and I know that those small amounts can add up, but at the same time, they are small amounts, and given the challenges of educational costs these days, wouldn't you agree that we need a baby bonds program that not only creates those trusts, but also provides some money to go into it beyond what children may be able to afford in literally the nickels and dimes and maybe dollars that they're able to put into it?
I think that what I can agree to is that it's an important issue and that we as an organization will be doing more work in this area. So for now, the best I can offer is it is certainly an important issue and we are looking into it.
Well, I do hope you'll support it. Thank you.
Thank
Mr.
you.
Chairman.
Thanks, Senator Blumenthal. Dr. Truwinsky, maybe we'll stay with you for a question. You noted during your testimony that owning a bank account and having credit are important dimensions of financial inclusion. Having and building credit makes it possible for older adults and people with disabilities to both live their lives and to plan for the lives they want to lead. We know that credit visibility gives people flexibility to address financial emergencies or to save for financial goals, whether it's owning a home or something else, and also the flexibility to develop and maintain retirement resources. We also know there are barriers faced by individuals and families opening bank accounts or entering the credit system or having access to financial services or products. These barriers, which are significant on their own, can be compounded by race or age or disability status. So here's the question. How does having access to credit or having a credit score or a bank account or access to loans with fair interest rates, how do all of those opportunities affect the autonomy of an older person or a person with a disability?
Thank you, Chairman. It's important for people to have access to the credit system at older ages because we will often see people going into retirement years with a reduced level of income. And at those times, we also know that because of things like inflation or rising costs for things like medical care or prescription drugs, we'll see budgets are stretched and people have to turn to other mechanisms to fund their longevity. And ideally, we want people to be able to choose how they live as they age. And for many people, it means choosing to live independently in their own home. So if you're an older homeowner and you don't have a mortgage, you might be able to tap your home equity to get funds to be able to pay for home modifications so you can stay in your home. So that's an example where someone needs access to credit. Another example is people will sometimes not have enough money to meet their monthly expenses. And unfortunately, we're seeing many people, particularly people ages 75 plus, turning to the use of credit cards to fund those interim purchases. What's happening for many people, though, is they're carrying balances and they're getting larger and larger over time, and they're not able to pay those off. So those are a couple of situations where having access to credit can help people get through some tough times. I also want to mention another situation we see pretty frequently, and this is a case where a husband may die suddenly, and all of a sudden, the wife is left to manage the family finances, and she's never had to do that before. I actually have a cousin whose husband passed away, and she had no credit history because they bought their house for cash. There was no mortgage. They didn't use credit cards because they paid cash for everything they needed. And now all of a sudden, she is in her early 60s and she's trying to figure out how to navigate a financial system that she has no experience dealing with. So these are the issues that people face, and there is a lot more that all of us can do to try to help get people up to speed on what's happening in the world of finance. I think the booklet that you have created will do a lot of great things to help the disability community. I think we need to advance further educational tools for all people and really at all ages, because financial inclusion should begin at an early age and continue throughout someone's lifetime.
Well, thanks very much, Doctor, for that. And Ranking Member Scott, I know we're awaiting one more senator who will be our final questioner.
Yes, sir.
Should be any minute now.
Well, the good news is, Mr. Chairman, this is such an important topic. I'd love to have another opportunity to ask a question.
Take as much time as you need.
Thank you, Mr. Chairman. Ms. Truwinsky, you have made a number of really important points. One, I hope that we would see implemented throughout the country, state by state, city by city, county by county, where we have banking days. I will concede that I did not have a banking day when I was a youngster in school, but it does sound like something that gives new meaning to the concept of financial literacy at a much earlier age. So much of the conversation that we're having today about being unbanked or credit invisible is something that could be perhaps eliminated or ended if we simply had something as simple as banking day. And I do want you to comment a little bit more about the importance of financial literacy or financial education early on, because the miracle of compounding interest or the time value of money are terms and topics that we don't oftentimes hear discussed in any school, whether you're K through 12 or college, or frankly, my nephew just graduated from medical school, did not receive financial literacy as a part of the curriculum in any of his advanced education or his basic education. Would you, at least for a few seconds, talk to us about the importance of banking day and or the importance of financial literacy starting as early as humanly possible, maybe when you're reading and writing for the first time?
Thank you. You make an excellent point that it's important to look into the childhood years to build these financial behaviors. And so we learn financial behavior by either doing them ourselves, as I did, because I had a very special opportunity to bank as a young child. But the other way we learn about money is from our parents. And so that is another issue that people face. If you had parents who were savers, who had the ability to save, you observed a set of behaviors that you will then eventually model yourself. But if you had a family that struggled and maybe they didn't participate in the banking system, you had a different set of experiences. So I would agree with you that, starting early means building good behaviors early, and ideally before high school, long before college, long before you take on that student loan debt, and then you owe thousands and thousands of dollars, and then you have to figure out how you're going to pay it back. Absolutely start younger, and I think that's how we will change outcomes for many, many people.
Well, Ms. Truwinsky, you just made a comment that reminded me of someone who said it. It wasn't me first, but certainly I'm okay to take the credit for it, even though I don't deserve it. It's that habits are caught, not taught. And so listening to what you were talking about there with parents or experiences early in life, that so often the habits that we form, it's not from what people teach us, it's from what we see. And our parents' behavior is how you embolden or reinforce this notion that what we oftentimes see in our homes is what we do ourselves, and we do those things unconsciously, hence the concept of habits are caught, not taught. I will say that the importance of my question as it relates to financial literacy starting at an earlier age is the fact that, as I did a little research sitting here listening to her speak, was that it appears that 40% of Americans when they retire at age 65, depend solely on Social Security for their retirement income. Ma'am, I would love to hear your thoughts on financial literacy as it relates to our seniors who are struggling, frankly, with an average Social Security income around $1,500 a month. How we prevent that from being the case for the next wave of seniors coming into retirement. And frankly, another stat that I heard, ma'am, was that somewhere around 44% of 60-year-olds have less than 1 year of annual income in their 401k.
Yes, thank you, Senator. Building savings over a lifetime can help people supplement the money they receive from Social Security. And Social Security is absolutely a critical program for so many people in our country. But the ability to save money is also a function of how much income you have. And so one of the things we are seeing currently is very large increases in the amount of debt that older families are carrying. The more debt you carry, the more you have to then pay each month to keep up with it. It's taking away money for other purposes, and unfortunately, in some cases, for things like food and prescription medications. So, if someone can save money from an early age and build savings throughout a lifetime and use 401k programs or work and save programs, any kind of retirement saving programs that are available to them, they will have a better chance of having a more secure retirement.
Mr. Chairman, I know I ran a little over time. Thank you for your indulgence there. It was an issue that I care a lot about and worked on in the banking committee. But I will say that, and these stats are old and they may not still be true, but I think they are relatively true. As a kid who came out of college and went into the financial services arena quickly thereafter, one of the lessons I learned early on was that a 19 or 20-year-old who starts saving about $100 a month, by the time they're 65 at a fairly high interest rate, they are a millionaire. The 40-year-old who starts saving $1,000 a month never gets there. So the time value of money is critical as it relates to the topic that we're talking about, and understanding that as early as possible in life helps us bridge the gap. We talk about the importance of abundance versus scarcity as it relates to the people who are facing the challenges that we have. But if we could start with just a few dollars at a very young age, we do create tailwinds as opposed to the headwinds that happens when you're closer to my age in trying to figure this out. So I think this is a very important and timely topic that so many folks will benefit from as we continue the hearing.
So the earlier the better, huh?
Yes, sir.
Well, we're joined by our final questioner, Senator Rosen.
Well, thank you, Chair Casey, and of course, Ranking Member Scott. I do agree with you. The earlier, the better it is to start saving, and the more we help people do that, the better everyone is. And thank you to all the witnesses for being here today. And I really do want to build on those questions that Ranking Member Scott talked about, improving financial literacy, particularly in our rural and underserved communities, because it's a critical part of increasing financial literacy is critical to increasing access to banking and credit, ultimately growing personal wealth, and of course, improving communities when people have more to spend. And so I can commend both the chair and ranking member for shedding light on this important issue. And a recent report and booklet that examines the financial literacy needs of older Americans with disabilities. And so it's imperative we improve it in states like mine in Nevada, where our rural communities, our communities of color, are disproportionately unbanked or underbanked and less likely to be included in financial markets or represented by more traditional financial institutions. So Mr. Stinchcomb, as a former computer programmer and someone who took care of my aging parents and in-laws, I'm curious to learn more about the innovative technology work done at TruLink Financial to offer financial services customized for seniors. And can you discuss how your company is utilizing data-driven strategies to improve financial literacy, particularly among our underserved, our rural communities, we really need to get everybody connected to these kinds of services using the technology we have available.
Thank you, Senator, for that question. I think that you're right to start with the connectivity question. That that the more people are connected, and the more they are fluent and demanding internet users, the more they will expect their banks to do better, and the more they'll shop for alternatives nationally from other banks and from fintech companies. So I think that that's a really good place to start. I think it's also there are questions about how the technology industry approaches aging in general. That often the entrepreneurs are thinking about more ways to order lunch at your desk, and less about the extraordinarily large population of underserved seniors. And I think that that's a mistake. I think it's a missed opportunity. And I think that educating the business sector in general, and especially venture capital and funders about how large this opportunity is going to be really important to addressing that gap.
Well, I couldn't agree with you more. I was on the broadband infrastructure group that negotiated that $65 billion for broadband across the United States. So I think I might be interested to see some data mapping reports on how access to the internet and financial independence really links itself up. This is why we know we have to get broadband out to each home, every community across America. Nothing could be more important, particularly for our rural communities, and good broadband for our underserved. But Ms. Truwinsky, I'd like to go on to you and talk about retirement trends among workers of color. We know 1/3 of Latino families, less than half of Black families in the U.S. currently have retirement account savings, compared with roughly 2/3 of white families. In Nevada alone, the Latinos make up nearly 30% of our population, and more than 10% of Nevada's residents are Black. So what can Congress do to help ensure that all workers, particularly workers of color in really diverse states like Nevada, have access to retirement accounts? And what lessons can be learned from your research that can be applied to my state of Nevada?
Thank you, Senator. One of the things that we're doing at AARP is we are working on work and save programs. And these are programs designed to allow small employers to offer a way for their employees to save. Because usually what you see are large employers may provide access to a 401k plan, but small employers do not have that capability. So through the work and save advocacy that we're doing, we are trying to get more states involved in offering these plans that would help smaller employers have access to retirement savings. So that's one thing. In terms of rural issues, yes, access to banking, access to savings and retirement planning, access to resources can happen using the internet. We talked earlier in the hearing about, broadband internet access, affordable internet access, because that's another part of it. Some people cannot afford it. We also talked about digital literacy training. And one thing that we didn't talk about is access to affordable devices, because in some cases, people cannot even afford the devices they need to connect. So those are areas that we are working on. And then the other thing I would say for workers across the spectrum, Social Security continues to remain a very important pillar of support at older ages, and the importance of it cannot be understated.
Thank you. I agree with you. I see, Mr. Chairman, my time is up. I appreciate all of you for being here today. Thank you.
Senator Rosen, thanks very much. We'll turn next to Senator Gillibrand.
Thank you, Mr. Chairman. Millions of Americans live in bank deserts, regions without immediate access to traditional banking facilities, and as you highlighted, 7.1 million American households are underbanked. My legislation, the Postal Banking Act, would reestablish postal banking to provide financial security to millions of Americans. Ms. Truwinsky, what impact would providing banking services at the U.S. Postal Service as outlined in my legislation have on underserved communities such as older adults and people with disabilities? And do you believe it would significantly and meaningfully expand financial inclusion?
Thank you, Senator. We have looked at this issue because, we know that in the 1960s that there was banking available through post offices, and then it stopped. It can be a way to get these services to more people. What's critical, though, before we change things to allow that, is to ensure that financial protections, consumer protections are in place to ensure that the postal workers are trained properly, and we also want to make sure that if it ends up being something where it's the use of prepaid cards, we've seen a lot of fraud and scam where people are tricked into using these cards or having their money stolen through the use of those cards. So the issue is we have to be careful, but I think it is a possibility of providing access to more people.
Mainstream financial institutions and predatory lenders are often taking advantage of the underbanked, as you mentioned, with high fees, interest rates that keep them in a cycle of poverty. Predatory financial services such as prepaid debit cards, rent-to-own stores, overdraft fees often exploit the most vulnerable populations, including low-income individuals, rural communities, veterans, and senior citizens, especially in times of economic crisis. Mr. Truwinsky, do you think that reestablishing bank services at the post office is an effective means of combating predatory financial services towards seniors?
I think that it's a possibility. So without understanding more about the way we would build in the protections, I'm not able to answer, but I would be happy to get back to you if you can provide more specific information. We'll study it and let you know.
Mr. Stinchcomb, do you have a perspective on whether postal banking would be effective in stemming the tide of predatory lending and banking services and provide more opportunities for seniors and people with disabilities?
I'm just personally so enthusiastic about things that give people more options. I think that especially in a digital age, it's oversimplifying to say that people will find the best option. But I think that the more options people have and the more connectivity they have, the better services they're going to be given.
Thank you very much. Ms. Jaspering, a key component of inclusion of wealth building and long-term savings is the ability to have private funds and assist with maintaining health, independence, and quality of life. The ABLE accounts do exactly that. And so I'm grateful that we've supported the creation of those accounts. I appreciate you sharing your experience. How would creating an ABLE account help you in maintaining health, independence, and quality of life?
Thank you. It would change my life. I would be able to save for emergencies, to be able to live my life like I lived before, and to be able to purchase things that disability equipment that isn't covered. There's so many opportunities when you're allowed to save money. The restrictions on not being allowed to save, I find are ridiculous because I can't live my life. I worry every day. Oh, do I have too much in my bank account? Did I work too many hours this month? And I shouldn't have to worry about that. I should be able to save money like I was taught to as growing up.
That makes sense. Well, thank you so much. And thank you, Mr. Chairman, for the opportunity.
Thank you, Senator Gillibrand. Well, I want to thank all of our witnesses, and we're going to conclude the hearing. I want to thank, in particular, each witness for their testimony today and for the expertise and in almost every instance, their personal story. I want to thank Ranking Member Scott for hosting this hearing, and Ranking Member Scott will submit a statement for the record for the close of this hearing. Today's hearing highlighted the importance of financial inclusion for people with disabilities and older adults. It affirmed that we should set up Americans for success in the earliest stages of their lives through children's savings accounts. For people with disabilities, we know that 26% of them live in poverty, and we learned that being banked and building credit are essential to building economic security. As Ms. Jaspering's testimony shows, some people with disabilities are arbitrarily prevented from saving for their futures. We have to stop penalizing people for wanting to contribute to their own financial security, and the Bipartisan Able Age Adjustment Act is a good step in that direction. We also must ensure our nation's seniors have access to quality financial services that help them maintain their independence and protect their money from those who engage in fraud. The fraud practitioners or fraudsters, the scam artists, the con artists, all of them. I again want to thank Ranking Member Scott for suggesting this hearing topic, and I look forward to working with this committee and working with him to address barriers that we heard about today. Before we close, let me remind you about the availability of our new booklet, the one that I made reference to, as did Ranking Member Scott, Building Financial Literacy, Information and Resources for People with Disabilities. This is available on the Aging Committee's website, which is aging.senate.gov, aging.senate.gov. So you can contact the committee to get a copy of this. If any senators have additional questions for the witnesses or statements to be added for the record, the hearing record will be open for 7 days until next Thursday, March 24th. So I want to thank everyone for participating today. This concludes our hearing.